What should people know when buying their first house?
Yeah, so we'll start from like the very basics. So let's say you have the goal of purchasing your first house and you have no idea kind of where to start. So one of the first things I would suggest doing is taking a look at what's on your credit reports.
All right, we are back with realty expert John Brodeen. Happy Friday.
Hey, how's it going?
Doing good. Always good to have a Friday.
Yeah.
End of the week, scorching temps. I am embracing it, and I'm kind of dreadful of it too, because it's like on Tuesday this past week, it was like almost 90 degrees. I went out for the run. Middle of the run turned into overcast, thunder showers.
Yeah, that came out of nowhere.
Yeah, I got drenched.
Oh my gosh.
But I think
I'm loving the weather.
Yeah, we're overdue for it, right?
Yeah, it's like we skipped spring here.
Mm-hmm.
I don't know. And it's about when I told John on Wednesday, my wife and I were in vacation in Canada last week. So it was like we were up the mountain. So it's like in the high 50s, mid 60s the whole time. And then we come back here, and as soon as we got off the plane in Winnipeg, it was like, whoo, it is hot here. It is summertime.
Yeah.
So.
I'm still in disbelief over this just craziness, but I am embracing it too at the same time. I absolutely love it. So on Wednesday, I kind of caught up before the show here just to get refreshed here. You guys talked about when to know the first time to buy your house. So,
yes.
So kind of conversely, when people want to get ready to buy their first house, what should people know when buying their first house?
Yeah. So we'll start from like the very basics. So let's say you have the goal of purchasing your first house and you have no idea kind of where to start. So one of the first things I would suggest doing is taking a look at what's on your credit report. So you can do this with one of the free apps like Credit Karma. They don't charge you. Your credit score is not exactly what they say your score is, because they're basically just projecting what they think your score is based on what's on your credit report. But it's still accurate, to a certain extent, and you can see what's on your report. So main thing here is we want to make sure that there's nothing like bad on the report that wasn't your doing. So like make sure there's not like something that doesn't belong there that's on your report that you need to make some calls and try to get it erased or something like that. If you do find that you need to work on your score, this will kind of tell you like, some of the areas that you need to start working on in order to get that score where it needs to be in order to buy your first house. Because this is something that can take quite a while. And what you don't want to do is you don't want to save up all the money that you need for your house and never check your credit score. And then when you go to get pre-approved, you find out that there's stuff that's going to take a year for you to build your credit score back up to where it needs to be. You might as well be working on this simultaneously while you're saving the money for the down payment.
I think I've heard stories from this similar scenarios from just talking to friends going in to try to get pre-approved for a loan for a car or for a house, and all of a sudden it's like, wait a second, I thought I paid this loan off on time, and there was some confusion years and years ago that no, it was a late payment many years back.
Yes, yeah. And then this is also around the time where you probably want to consult with a lender, because like, for example, we've had Shanna on the show before, and there's other great local lenders that can give you some guidance, because like they might say, oh, you've got this judgment from a medical bill from 10 years ago and it's an outstanding balance. And she said this to me before where she's like, no, they actually shouldn't pay it off, because then that brings it back up to the surface and then it'll negatively impact your current score. Like, don't touch that until after you've bought a home, because it's been enough time, you've built your score back up. Don't do that. Or, some other little things that the lender can tell you is like, okay, I know you want to buy a $250,000 house, but right now you have a $400 a month car payment. So that puts your debt to income ratio too high if you were to buy 250. So you wouldn't qualify for 250. But, instead of, paying off this student loan or putting your money elsewhere, if you work to pay that car off over the next 2 or 3 years, then you'll be able to qualify with your debt to income ratio for that $250,000 house, for example. So it's your main team members. This will kind of lead us into part 2. The people you need to be in touch with from the early days. So you've begun trying to save money. You've checked out your credit score, making sure there's nothing you don't recognize on there. Getting in touch with your real estate agent, who you want to be a real estate agent when you buy your house, and getting in touch with your lender that you're going to work with. It's a great idea to ask your real estate agent for a recommendation to a lender, because they've probably worked with a ton of lenders in the area and they probably know who's good and who's not. it's great to get in touch with those people early so they can set you on the right path so you don't kind of waste time and energy doing stuff that's not going to benefit you.
Save you a whole lot of time all of a sudden, like, hey, why did I go through this pile of paperwork and forms when they could have just pointed me in this other direction the whole entire time?
Yes, exactly. It's kind of to make sure that you're not going to do stuff that's going to set you back or make that timeline even longer. Make sure you're just on the right track, you're doing the right stuff, you're chipping away at whatever you need to do in order to qualify. A lot of people, maybe they don't have a ton of savings. You will need, some savings at a bare minimum to buy a home. Even if you're purchasing a home, like the only way you can get into a home with zero cash out of pocket is if you were to do like a VA loan or a USDA loan. The VA loan is going to have a funding fee. You would have to wrap that into the loan amount. That's in place of private mortgage insurance. And then you would need the seller to cover all of your closing costs. So you can see where this could be. I don't recommend this strategy, especially for military folks who are only going to be here for a couple of years, because if the market doesn't go up, you're kind of starting with negative equity. You might buy that house for $250, but the seller gave you $8,000 in closing cost assistance, so you really could have gotten it for $242, and then you wrapped in another $8,000 worth of the VA funding fee onto your loan amount. So now you owe $258 on a house that you could have bought for $242. That's probably worth $242.
They'll find themselves already in the hole.
Yeah, and it's a safer option to just pay, even if you're doing a 0% down loan program. It's better to pay that funding fee out of pocket so you don't start with negative equity, because that's dangerous. That's kind of what caused the housing crash in 2007.
I think anything with the word negative, I want to stay out of.
Yes, yeah. Being underwater when you start is not a good place to be. It basically means you'd have to write a massive check if your life drastically changed and you need to sell this house a month after you bought it. You're gonna have to write a huge check to get out of it, or else you're gonna get foreclosed on, basically. So, but saving up money for a down payment. We were talking on Wednesday about that new show on Netflix called How to Get Rich, which is basically just this guy trying to help people out who are in kind of crappy financial situations in some cases, trying to get their finances in order and set them on a good path. And what he recommends is try to save up 20% down payment. You don't have to use all of that money to make your down payment, but if you saved up, 20% so you could make a 20% down payment. Even if you just put 5% down, you've still got that money sitting aside. So you're not so.
I think that's great because it kind of sounds like I've heard people do similar, but for putting a little bit out of each paycheck to save for that dream vacation. But
100%.
instead of that dream vacation, you're saving for that even more important down payment.
Yes, exactly what you said. Taking a little bit of money out of each paycheck, making it so it's an automatic transfer from your checking account into a savings account. What I do personally is I have that savings account at a different banking institution. So it doesn't show up on my main online banking that I run my personal checking account and business accounts through. That way I don't see it. It's way more of a hassle if I want to transfer money out of there. It stops me from touching that money unless I absolutely need it.
Won't be tempting you.
It won't be tempting me. I don't see how much is in there all the time. I don't. It's just so much. It's so much easier not having to have any temptation. And setting up on an autopilot makes you treat it like a bill. So it's just like, okay, this bill comes out each month for X amount. Let's say I'm saving $500 a month or $1,000 a month towards my first home. That bill just comes out and you treat it like a bill and you forget you ever had the money, rather than you having to consciously be like, okay, I'm gonna take $1,000 out of my checking account and put it in this savings. That takes willpower. You're having to think about it. The chances of your
Good, easy to get out of the habit.
Yeah, the chances of your willpower lapsing, 3 months out of the year are pretty high versus if you just set on auto and you just forget about it. So that's the best way to save money. If there's no money left over to set up that automatic savings, then you need to take a look at your finances and see, where can I cut some costs or earn some more money? If you're trying to cut some costs, some things are like, are you driving way too expensive of a vehicle? Could you sell your vehicle, get a used model that's a few years older, either pay for it in cash or have a smaller car payment? Housing, transportation, and food are usually the biggest things that eat up people's budgets. Are you eating out too often? That's kind of an easy one to fix, but that's not going to make as big of a difference. Is your rent for your apartment way too high? Like, are you spending 50% of your pay or 50% of your monthly paychecks on rent. Maybe you need to get into a lower rent apartment, make some sacrifices so you can reach those goals. And even if it's not just to reach those goals, then you'll have more money and you'll feel more secure, and you'll be able to save, you'll be able to spend more on the stuff that you actually care about.
I think that's great, because it's like, it may sound like one of those basic things we learned to do growing up, but it's surprising how effective it is. Make a list of your daily, weekly, monthly expenses, and instead of going for that large, fancy Starbucks coffee, get the base, maybe get a basic gas station coffee or something like that, and all those little things add up.
And if you have a goal in mind, it makes it exciting, because like even though you're making sacrifices, you're making strides towards reaching your goal. So that's the way to really think about it. So do a budget. I know that's a crappy word nobody wants to hear, but
the old budget.
Take a look at, like, go back 3 months, see what you're spending on average per month on each of those categories. Cars are a big thing. Like Dave Ramsey says that the total value of all of your vehicles, so cars, boats, RVs, dirt bikes, ATVs, motorcycles, all of the value of all of the stuff that you own that has an engine should be less than 50% of your yearly after-tax income. So that's an easy way to tell if you are overspending on your car to impress people at a stoplight and sacrificing your financial situation or impress people who don't care at a stoplight,
So you may use a little bit of judgment when trying to build your own personal toy collection. Adult toy collection.
Exactly. Like Dave Ramsey also says, so your vehicle shouldn't be more than 50% of your yearly after-tax take-home pay. He also says, he's a big fan of only driving a paid-off car. So if you can't afford it in cash, you can't afford the car. Not having a car payment, people are going to reach their goals so much faster, even if it means driving a 12-year-old kind of beater car. Your financial situation is going to be so much better. He also says never buy or lease a used car. He's against leasing, period. But don't buy a new car unless you're already a millionaire.
Wow.
Which, I mean, if you're a millionaire, you can afford the drop in value that a new car takes the second you drive it off the lot. So, obviously they're doing fine, and they probably don't need much help with their personal finances.
I know I can kind of relate to that, because I know I didn't buy like a super old used car at the time. It was only just a few years old, but I got set up with a 3-year loan plan. And once I got it paid off, I'm still driving it to this day. It runs great.
That's such a great decision. Yeah. It's like, then it makes you think twice. If you actually think about, instead of can I afford this monthly payment, it's like, can I afford to actually buy this car? Now you're in a situation when you buy your next car, you're probably not going to want to go back to having a monthly payment, you'll sell your car, you'll get some money for that, and you'll use some money out of pocket, but you'll probably buy the next one in cash too. And then that just sets your life up great. It's a really important thing, that it's a kind of a hack to, and in general for personal finances, like Dave Ramsey, for example, we keep going back to him. He recommends saving up like $1,000 emergency fund. And then once that's in there, all of your leftover money, you've created a budget, you're spending less than you earn, taking all that leftover money and aggressively paying down your debts, starting with the lowest balances first, so you can get kind of some momentum going. It's not by the numbers the wisest way to do things. If you were to go by the numbers, you'd want to pay off the debts with the highest interest rates first that are costing you the most money. But from a behavioral aspect, it is a really good idea to start making progress on those lower balances first, so you can see your progress and you get that satisfaction of, that first loan is paid off, that first credit card's paid off. Then work on the next one, then work on the next one until you've cleaned it all out. Now, you would want to talk to your mortgage lender before you decide what type of debt payment strategy you want to work up if your goal is to buy a house, because your goal to buy a house might cause you to have a different, you need to pay this one down because this one's hurting your debt to income ratio more. It's going to be more about eliminating the highest monthly payments that have the lowest balances, I think. And that's a question for a lender. But
that sounds great. It's like giving a turbo boost into one of your first budgets to pay off, or balances to pay off.
Exactly. Yep. It's and once people get a little bit momentum and they start feeling good about their finances instead of being worried about their finances and just trying to ignore it and pretend the problem's not there, that's one thing on that show that I watched is like people, when their stuff was in bad shape, they wanted to ignore it and pretend it didn't exist so that it didn't stress them out. But then they seemed a lot happier once they actually started making progress on it and got real about it. So yeah, it's a good show for people to check out if you want to learn a little bit more about personal finance.
And what's the name of that show one more time?
It's called How to Get Rich on Netflix. It's a total gimmicky name, but it's really not about getting rich. It's just about how to manage your money properly for a normal person.
But it's very or ear catching, eye popping.
It is. Yeah, it's a good makes for a good thumbnail, but yeah.
All right, so to recap, what you should do before you buy your first home: make sure your credit score is in check. I got there. Talk to your real estate agent and lenders, and make sure your savings is in check, and also that $1,000 build up a nice little rainy day turbo booster when it comes time to pay off the debts. Have that ready.
Yep, exactly.
All right. So I was looking at other upcoming Berkshire events we're kind of talking about before the show to plug here coming up. We got the big Bruce Spicer golf tournament.
Yes. Yeah, that's always such a fun time. It's coming up here in July. I think you've got the website written down. Is it brucespicergolf.com?
Yep.
Okay.
I was talking with Adam last week. Yeah, brucespicergolf.com to sign up. And there's a Facebook event page also he recommended to check out for more information. And
so if you're a business person in the area and you want to become a sponsor, you can talk to us about that. If you want to set up a team and you and some friends join the golf tournament, it's always a great crowd there. It's always a really fun time. Everybody has a blast at that one. So
very, very cool.
And I should mention all the proceeds go to help underprivileged kids with purchasing their hockey gear and helps get them into hockey because hockey is an expensive sport. And so they've given a ton of money to Grand Forks Youth Hockey over the years from this.
We can't go wrong having some righteous golf and then knowing all the proceeds go to a great cause like that.
Yep. It's amazing.
All right, John, what's the best way for people to reach out and contact you?
Go ahead and follow me on Instagram, on YouTube, on TikTok. If you want to become a client, my cell phone number is 701-213-5428. So just shoot me a text, give me a call if you want to become a client, or if you have real estate questions, I'd be happy to talk.
Awesome. Thanks for coming in, John. I hope you have a great weekend.
Yeah, good to see you, Dale.
Always. All right. Well, that concludes Friday's Berkshire Hathaway podcast. Many thanks again to John Brodin for joining us today, and many thanks to producer Paul. We'll be back next week for the Berkshire Hathaway podcast Wednesday morning at 10 o'clock. Until then, have a great weekend, everyone.